traders, welcome to this video. Will Sebastian from the Trading Mentor. We run a live academy every single day, live on Zoom, teaching traders all around the world as we trade for income ourselves. Don't forget, you can get our free training underneath. So gold, I will do a run over for my channel. You can see that you've just picked above last week's high. So you may find this has somewhat of a reminiscence of a market maker stop. There is core PCE, personal expenditure, news today, personal consumption expenditure out in the US. So what people spend obviously has a lot to do with prices. It could give a very good indication on what is next from the Fed. Of course, the Fed largely feeding into the risk-on sentiment across the board. Strangely, you've seen gold rally within that. Okay, so there's a mixed bag really for the sentiment reasons why gold's rallying. In some ways, it's really weird because mostly you'll get gold rally in times of uncertainty, but it seems if you look at the market watch list, everyone is very certain. So a little bit bizarre. It may be the case that gold is being bought for an impending crash, perhaps, but at this point, sentiment's not going to be that reliable for it. All you can really say is that the tech sentiment, if you like, is to the long side because there's so much buying going on. Now, ultimately, and as you will have seen on my channel, ultimately, I am short biased. I think it's just not really going to happen where it stays up continuously all the time. If you look at all these other pushes, you know, they do go very high, yes, like this one specifically, but they are followed by a series of lower highs and lower lows, and eventually the market comes back. I mean, if you look at the general history of gold, every single rally is followed by a fall. So at this point, it's not exactly if, it's more or less when. So that means you've got to do one thing, and that is manage risk efficiently, manage risk correctly, because you've got to be ready for that, okay, or this, either way. Now, I should think now you've got reasonable a distance away from this key support here. I mean, it's minor support. I did say recently that I don't value it too much, but since you've rallied somewhat, you know, 80 bucks, 90 bucks on from that, it is fairly valid now. So that may be your first point of contention. It was very slightly there, but it didn't offer us an enormous rebound really in any sense. So, I mean, if you're going to short it, I would do it in line with just very, very careful risk plans. Don't keep selling and selling every 5 minutes. Space it out, because if you'd done that so far, if you'd really spaced out the shorts, you know, even if you've been wrong shorting this high, you're not that much out of money, you know, and you might have accumulated all the gains like we did on the move up before that, on all the trades called before. So you're well in gains overall, but the way to keep those gains is to space things out and make it light. Like I said, eventually, you know, off the back of a $250 move or so, you would expect ultimately to get a reasonable retracement, but that does not mean you can't keep going higher, all right? So if you do get higher, you know, you're really in no man's land. It would be a new all-time high again, and there's nothing to reflect off here. You cannot pretend you're the one who knows the day, the date, the second, and the time, down to the millisecond when this is going to fall, because you just don't. All you can do is scale in for that value, scale into the market as it rises to create a good deal over time, okay? Because all the way up here to the short side is full of good deals. There's good deals left, right, and center. Okay, but you'll never get those good deals if you're someone who is over leveraging. And like I said, you believe you've got the ball, the crystal ball, to know when this is going to fall, the exact day, date, and time. So wouldn't be shocked if you get higher. Wouldn't be surprised if you get lower. At this point, I think you've got a good case for shorts in the market just on that very early price rejection. Okay, it's not amazing, but you are seeing slight candle wicks here. I mean, the market is dead pre-news because it's quite key news, and it's probably the most important thing this week. You can see minor support there exists. Lower underneath that exists further MAs. So another bump in the road, perhaps you might find along these key price action areas in line with your 40 MA off from the back of your 20. Ultimately, scaling to your higher MAs, you know, you may find yourself lower than that and another bump in the road. So I don't think it's going to crumble all in one go. I think if it is going to fall gold, it's going to take a little bit of time and it's going to crumble through those levels. But you would need stronger market sentiment to do that in the near term, which you don't have. So nonetheless, short bias remains, nothing major, not going crazy on risk, trade it light. Don't forget, you can join us underneath the video. See you in the next one.